Peter Eliades with your stock market cycles update for Tuesday, November 26th. We're settled down in Arizona now. We couldn't do an update yesterday. We didn't get until late in the evening. I did one this morning, but it never got online because of technical problems. So I figured wait till the end of the day today and we'll try and catch up with most of the things at that time. And so here we are. I can't begin to tell you how incredibly disappointed I was with yesterday's action. Not that we went up significantly, that was fine with me. We came closer to satisfying all projections. But the fact that there were 2.6 to 1 advanced declines at the end of the day, so disheartening. So when you come that close to a sign of the bear, to the setup for the sign of the bear, it's so disappointing not to see it follow through, especially in light of what happened today. Another perfect churning day. So anyway, it's gone. There's nothing we can do about it. You have to start from scratch again, start from zero. And I've told you how rare 15 consecutive days is, which is what we got. Now, I'll go back and take a look and see if there were times when there was a day like we had yesterday within sign of the bear parameters. But I've done a heck of a lot of research on this over the last 25 years, folks. And it's just so disappointing. So what does that mean? It doesn't mean a thing in terms of a potential market top. We had a very important market top in 2007 without a sign of the bear. But it would just have been a confirming point behind everything we're looking at now that starts to beckon at you and say, you're getting very close to a potential major market top. And to have lost that sign of the bear, it was heartbreaking for me. It really was. Anyway, it's over with. This is behind us. If I find anything new in my research, I will let you know. In the meantime, remember this chart you're looking at? Chart of the New York Composite Index. We showed it to you several weeks ago, back in around this time period, and said, I don't think we're going to top out till we at least get back to this line again. Now, I had thought we might get back to it where the line, the trend line, joined the all-time high line right here in January of 2018. That's not what happened today. But remember, we can still have some kind of pullback and a move back into the end of this year, the beginning of next year. That's a possibility. But what I see happening here is we have, now let's zoom in on this. I'll show you where we are in respect to the line the last couple of days. Does it look like we're close to the line? You bet we are. And this line has been incredible support as prices come down from above it, and incredible resistance as prices go up from below it. So they've reached resistance now. Should they go blowing through here and blowing through the old all-time high? We're looking at something else happening here. Still within projections, unless we exceed all projections, but this is very important. This is telling me, at least, that I think for now we start to get some kind of pullback from here. I'm not calling it a very important top yet, although it could be. But I'm looking perhaps for that pullback and a move in to the end of the year, beginning of next year again. So that's one chart we wanted to look at. How about the closing nominal 40-week projection? Look at this. Is this a classic? We showed you this again a few weeks ago and said, if we come up and meet, we thought it originally might happen in the middle of November, right in here, but look what's happening right now. Let's zoom in on this one. If you zoom in on this one, this is what you're looking at. Right into the projection window. We lost the trend line there. Let's go back on that a little bit. Move back out again so we can see that trend line. But look at the trend line. The trend line, so what you're doing is you're meeting the trend line at the same time as you're meeting the closing projection. That's a pretty good formula for a market top, folks. Now, mind you, if we look at the intraday projections from the bar charts, not quite there yet, and we have met the trend line there. The trend line I showed you on the chart before this is based on closes. This one is based on intraday highs. And let's zoom in on this one. We got a tiny bit above it today, I think. There we go, a little bit above it, and closed a little bit above it. Again, I would not be surprised to see some kind of pullback here, and then perhaps a move into the end of the year, the beginning of next year. But we should be at a level where prices find difficulty in moving forward. Now, most importantly, it has not met the lower end. It has not met the lower end of the upside projections. Let's go back out on this. And 31.58.63. The high today was 31.41.65. So still 15, 20 points away from the lowest end of the projection. So that's leading me to believe that the market's not through to the upside, although you could make a pretty good short-term argument that we're in an area of great resistance. That's it for now. Again, I'm away. I don't know what's happening technically. I apologize for the video and the audio on this update, but that's what happens when you're using your laptop. I know we'll get the message to you. I hope you appreciate that. And thanks a lot for watching. Leave us some commentary below. Give us a thumbs up. Thanks for watching. We might have something on tomorrow. I can't guarantee it. If not, though, we'll have at least one more update before the end of the week. Thanks so much for watching.